Oh, it's the Alexandra Mexi clap. Juan, you haven't heard that before, really, have you? Well, I mean, you must have heard it on the podcast being an avid listener.
I am an avid listener, but I don't listen. I put it on to qualify as a listener.
Yeah, so there you go. Damian, we're joined today by Skadi's FX Supremo, Juan Corbella. Well, let's hear it for Juan.
Thank you.
Very much looking forward to this conversation, actually. Yeah. We'll learn a lot, I'm sure, from the maestro.
Well, we're recording on the 4th of July, so happy Independence Day to our American listeners.
Barbecue tonight.
Yeah, is it? Nice. It's lovely weather in the UK, and it's election day as well.
It is.
And that really is the focus for this month's edition of Horizon Unpacked. We wrote back in November last year when we started collecting our thoughts. And in fact, we did it a little bit earlier, but we were really publishing our thoughts in our 2024 Emerging Risks Outlook, Damian.
Yeah.
And the first one we cited was, geopolitical risks and election risks, because we knew this year was going to be a huge year for elections, and now we're really in the thick of it, aren't we?
Yeah.
But actually, it's kind of surprised us with where it's gone to.
It has, and also, obviously there were the in inverted commas planned elections, but we've had an unplanned one, which was Macron's French sort of snap call post his party faring very badly in the European elections, and that obviously. Well, we'll come on to all of this, but, volatility is key. And actually, you have seen a bit of vol in France, but nowhere else really yet. But I suppose yet is the key in that statement.
Yeah, exactly. And I think, Juan, you've got an interesting viewpoint, given that, Damian and I are British, and you're more, I say, Eurocentric, let's say.
Yeah.
But also, in fact, your home is Mexico, isn't it?
Yep.
As well. And there's been elections there, right?
Well, elections with a majority from the new president that no one expected. And even some people say that mathematically it was not possible. So it raises a lot of questions. But the new president of Mexico, the first female president of Mexico, has completely authority to change whatever she wants to change. And she will.
Wow, wonderful.
So we're in front of 6 years of change.
So it's really setting us up for a very, very uncertain second half of the year.
Yes.
And of course, we have the daddy of them all with the US election coming up at the end of the year. Mm-hmm. And already that's off to a shaky start, given the performance in the first debate.
Yeah, absolutely.
Volatility can only increase if they have to change Biden for a new candidate. If it's not Michelle Obama, I think that everyone else will be questioning if the new candidate will be able to beat Trump.
Yeah.
Oh, man. So there is so much to kind of get our teeth into. But, of course, the Skadi podcast, while we love talking about markets, we're always trying to think about what the implications are for the control functions. Yeah. And really, our purpose is to raise awareness. We think about things, from a market's point of view. That's part and parcel of the way, we think and operate. But we're always trying to think, okay, so what does this mean? What are the implications for markets? What are the implications for policy? What are the implications for products? And then if you're sitting there in the control functions, looking after our financial industry, what should you be on the lookout for? How should you be responding to the uncertain things ahead of us? So anyway, if we start on the elections and the capital flows, if you like, let's look at the UK, because we're all out there, voting later today, or certainly I will. Has anyone voted already?
Yeah.
Not yet.
Yeah.
Oh, so relaxed. Alexandra, are you voting?
I don't think I'm voting. I'm not British.
Okay. Okay. Understand. So in the UK, I think it's just such an interesting dynamic, because never has there been an election where the outcome has been so certain, I would say.
Yeah.
Yep.
And also the other interesting undertone that I've been catching, 8 years on after Brexit, is there seems to be, louder rumblings about a move back towards Europe.
Yeah.
So if you've been working in compliance for the last, 8 years, all you've been focusing on has been the divergence from Europe and how everything's going to be different. And maybe now it's rip up the rule book and go and dust off the old one, because it looks like we could be trying to move back. What do you think, Damian?
Yeah, no, I think that's a very well. You say there's been a lot of I mean, I haven't felt really there's been a ton more chat about it. I think a lot of both the main parties have tried to steer away, I think, any conversations. We'll see how that pans out. Hopefully there will be change.
The higher the majority that Labour will get, the more certain that we'll see things that were not in the manifesto.
Yes, I would. I mean, I'd like to think so. But we'll see how that pans out. But I mean, yes, I completely agree. That having had that sort of divergence chat for what has been quite a long time now, it'll be interesting to see if that reverses a bit.
Well, if it was only about the UK, but of course, meanwhile, in France, we head back to the polls, and that's, as you said, that's an unexpected snap election, and I think also a little bit of a proxy for how we see, the attitudes in Europe.
Yeah, I mean, I suppose, and the interesting thing to a degree is that I suppose the UK is a slight outlier, as in we are moving, you would say left, or maybe you go centre left, certainly, whereas Europe is definitely pulling to the right, or attempting to pull to the right, at least as this French election is looking to demonstrate. We won't find out till round 2 is over this weekend, I think this Sunday. So
it will have to move right, because even if Le Pen was to lose, people will try to get the votes for Le Pen. So just for Le Pen being there with a 30% majority vote, even though she's not in the government, she was extremely influential.
Yeah.
So that's kind of interesting, because you've got, as we were observing, a kind of swing to the right there. I think we've also got more of a kind of balkanization of attitudes within Europe. The European project is looking more uncertain by what's happening.
Yeah.
I mean, Damian, you and I were, and I can't speak for Juan because we didn't know each other, but I do know his background, and it's much longer than ours in the FX markets. Yeah. But you and I, we were trading West European equities with the introduction of the euro.
Yep.
And the thing I recall very vividly was just the day after day weakness of the euro after it was introduced, as people tried to digest and work out how this kind of 12-lane currency or whatever it was, or all going into one, how on earth that could work. And then you had this kind of persistent weakening. And I can only think, with what we're seeing now in terms of the shift to the right and people's sort of attitudes, not just in France, right, Juan? There's been other kind of rumblings across Europe, right? No,
we've had it everywhere. I mean, Italy had already the election before. We haven't mentioned it, but Italy has done exactly the same move that France is doing now. And, the outlier Spain, with the socialists still remain in power, but is all about, liaisons with the regional parties more than anything else. Austria is already quite far right. Yeah, the core is moving in one direction.
Yeah. So it's going to be certainly an interesting time, and, specifically for the euro, and it's great to have Juan with us. We'll probably get on to more of that a little bit later, and then just quickly, we should whip round what's going on in the USA, because although it seems far off, it's already coming into the kind of the field of vision now, because of what's happened with the uncertainty on Biden, and you've talked about Michelle Obama. Where have you brought that out from, Juan?
No, opinion polls. They have already done opinion polls. And the one a candidate that stands very strong against Trump is Michelle Obama, even though Michelle Obama has very, very clearly said she has no intentions to run.
Right. And you're so much more plugged into the US than us, aren't you? Because you were at Harvard.
Yeah. 6 years.
Wow. So does that give you a bit of more of an affinity for the US?
I lived in the US 12 years, and you grow with it and you understand the system. And right now, the US that I left was very unified, where the Republicans and the Democrats were almost the same thing, seen from European eyes. And now the Republicans and the Democrats are very, very different animals. So whoever wins means a lot for the US and for the world, of protectionism, of, a flow of business, flow of reserves, flow of everything. I think it's quite significant, this election.
It is, isn't it? The words election and significant this year, it really is the dynamic duo, if you like. And of course, there's so much implications for, as you say, all of those things, but two specific places, Ukraine potentially and Israel. Both sitting on the kind of, really important, in terms of, Ukraine and commodities, just the amount of control over softs. Whoever wins in Ukraine ends up getting control of all of that.
Yeah.
Right. And then Israel, we're already seeing the impact on supply chains and the amount of time, people are having to add, avoiding the Red Sea, going round, using other routes, and what, the implications are for that. And that, of course, we're getting into that second half of the year now where we start, upping the shipping, Thanksgiving, Christmas,
etc.
And so on. So that's obviously important too. So I guess let's look at some of the implications for, what's going to happen. Obvious one, volatility, Damian.
Yes. Right? Yeah. And especially, I suppose, if you look at certainly, the main sort of measure out in the States, equity volatility is the VIX. That's trading down at like all-time lows. I'm somewhat surprised with that, given the election is definitely now very much coming into focus. But yes, so and volatility feeds through to lots of other things. So, products, when vol's low, you can get out there, you can gear up more because the sort of your multiplier, as it were, is allowing you to strap on more risk. Mm-hmm. So the low vol has big implications for markets, and if we start to see that move in any sort of sense, there will be big knock-on effects. There could be big knock-on effects, and as you often find, vol starts to go up, and all the stuff that had sort of been hidden by these lower vol markets suddenly becomes uncovered. So it'd be interesting to see.
And then you had obviously the embedded effect of volatility and historical volatility into models. So I think the good news is we've kind of had a move like that 2 years ago. So you'd like to think that a lot of that impact in terms of, the unseen risks institutions face have been, maybe identified by that move, perhaps?
I don't know. I mean, vol is now traded as a product in its own right, and I think that is part of the problem in a way. Any uptick in vol is sold immediately. Now, that's great when you have a mean reverting type market, but there comes a point where it's going to spike, everyone will sell it, and it will just keep going. And then you could see absolute carnage. A lot of the chat around vol is around the sort of passive index ETF bid that you're seeing in markets. This is people's 401ks or whatever it is. It's just constantly putting money into the market, which is just suppressing vol. And obviously the S&P has been the sort of, the best trade to have. Well, even the NASDAQ even better, but it's just been a one-way bet, this stuff. And a lot of people made a lot of money on this trade. If you start to see a slight unraveling of that, I think there could be a lot of mess around the corner. And it may be something like the great thing and why we're having this conversation is that elections are these points that can become inflection points where actually suddenly they give people a chance or an excuse to change their strategy, whatever it may be.
What about FX vol? What's that look like?
With the changes that we have in front, also in foreign exchange, the difference with equities is in foreign exchange you have two countries or two variables in every cross. So if we take euro sterling, I see sterling becoming less risky because we will end this insecurity that we have had in the last years of the change of 5 prime ministers in 5 years. It looks like the new Labour, it's almost closer to new Labour, so the government now, the possible government now, than the 1970s Labour. We'll see if happens like that. So I see the UK volatility coming down, while in Europe I see the volatility coming up. And if it was one reason for Brexit was the fear of European Union project breaking down, and this is the only time. Since the Brexit, the time that's going to be tested, if France can really stick to it and keep everything together, and if Germany and France can keep on pulling all the countries together and keep the currency and everything together. So I see euro sterling, all the UK assets appreciating and European assets depreciating.
Yeah.
And what does that pick up in vol mean? Because obviously, I come much more from an equities background, but certainly, FX tends, it doesn't move anything like an equity. It tends to trade in relatively narrow bands a lot of the time. You probably see a lot of structured products written off that one. That's probably stuff that you've seen. I mean, what can go on in these things when you start to see a pickup in vol?
The group permanent selling volatility tends to be retail,
right?
Because they see the yield that they can achieve, and they only think in the yield, and they don't see this whole carry trades and linked notes and everything, the risk that they carry. And once they say that they're getting 10% or something like that, when there's interest rates are at 4%, they go for it, and are the ones that are constantly selling and holding the position because they buy the 2-year note or the 1-year note, and they have no intention to sell it or wind it halfway through, and they really hold the short position till the end. I think that is the risky camp, because that is the part that can be hurt the most, because volatility explosion, I think, will hurt them the most.
Yeah, so I mean that's it's really interesting, the kind of the connections that are so much more obvious to people working in the institutional market that just aren't so obvious, or to people they're on the retail side,
which have huge flows.
So it's definitely if you were advising the control functions, where do you want to start focusing your attention? What are the areas of risk for institutions? You'd definitely be thinking around the risk to a lot of products that have been sold to retail, because these are the kind of inflection points, like Damian's identified, where you start to get big moves played out, and people aren't necessarily ready for that. Right?
The structured products are the dangerous one. It's for retail primarily, because they're all yield enhancement products. So they have to sell something. They sell volatility
to create the yield.
They have to be long dated to be able to get the rates that they want to create. So it's not a 3-month trade, but then to be 2-year trade, which is much more dangerous. And the retail customer can always say he didn't understand it.
Yeah.
So you always have it's sort of like short end of the stick, because the retail customer turned around and said, "You told me it was never going to go down. You told me that." It's very difficult to argue.
It's interesting, actually. Sorry to butt in, but I mean, we were talking a few months back about the auto-callable issue that we saw out in Asia, with the Chinese market falling and Hong Kong market and knocking through barriers that then kick these products in. And we were sort of going, well, maybe people should keep an eye out for these sort of things in Europe. And those markets were sort of, I'm talking equity markets, have carried on, up and to the right. But actually you'll find that, well, it's interesting that Juan brings that up, in that area I hadn't really thought about, that actually you have similar type yield enhancing products that need to trade within a certain band. And then suddenly you might find that as they trade through that band, the modeling of that product changes completely.
It's this creation, right? People are structuring this stuff, with a purpose. And now is the time, if you're working with control functions, like, where is the emerging risk? What's coming over the horizon? And this seems to me, somewhere where you can be really proactive. Go back now and look, because as Juan's pointed out, it's the easiest thing to say to people. I just didn't understand this. Now's the time to look. Go back, have a look, see those check those marketing materials. Have people been actually, being very prudent about how they've been offering products to the customer base. Where are the budgets? Have we made an awful lot of money in retail? Should we therefore be going, okay, now we need to just make sure that money's safe, or are we going to be ending up giving a lot of that back in
selling fines?
Absolutely. Well, that's a great area. I'd love to just focus a little bit more, because you've actually written a special focus piece for us in Horizon, so people look out for that. But it's great to have you on the podcast too, Juan. Just talk a little bit more about some of the other things that you foresee when you get moves like this in the market.
I think that you have to take a step back. What is a price? A price is an equilibrium of a demand and a supply. So if you knew all the demand and you knew all the supply, you would be able to know the price. Now, on the currency side, it's literally impossible to know all the interest in one currency net. And on top of that, not only is the flows on present value, is the expectations, because there's a lot of people selling forward. So the news that could come in the future, the uncertainty gets added to it. So the currency markets will move on the back of probability of something happening, which hasn't happened even yet. So the possibility of forecasting currencies, or the ability of forecasting currencies is so complicated, it's almost impossible, because you never get to know what the real equilibrium is. And I think that right now, thinking back in the time when we got high volatility, were the dangers. Orders left that should have been cancelled and have not been cancelled.
Yeah.
So I think a review of the order book to see what the legacy orders are and should they be there, should have been, with a cancel date or something like that. The other thing is,
So it's those important letters, GTC.
Yeah.
If you've got GTC
It's
sitting
good to
around the
cancel.
order book, probably time for a review.
Yeah.
Sorry, Juan, carry on.
No, yeah. Then the other thing is news that create that move doesn't happen always, don't have to happen in the best liquidity market. So be aware that you could have a much larger move if the news come on a Saturday or a Sunday when the market is not open, and then you have a gap jump in New Zealand when the market opens, or in the smaller markets when any Asia currency impact in New York time or things like that. And therefore, the stop losses, you could have significant slippage in stop losses, and you better speak with the customers now that they're aware that it could happen, and not afterwards. How could my stop loss at level whatever been done so much worse? It's because there was no market.
Yeah, and that's played out, hasn't it? In fairly recently, we had the decision on the guy that traded the South African rand over Boxing Day.
Yeah.
Because FX it's a global market. It's a 24 hours a day market.
But you don't really see. It's not like if you look at a stock chart and you can see where the volume is here, the volume is there. A lot of FX charts don't really show volume on them per se, and obviously you might see a 24-hour chart, but that Asian hour, certainly for us here sitting in Europe, Asian hours, hardly anything's traded there. So it's a nightmare. You get a stock tripped, and then you come in the morning and go, oh, nothing's happened, and someone goes, no, you forced out your position 6 hours ago, like 3% lower down. You're like, well, how did that happen? Because there's just been no liquidity, and the market's moved to knock you out.
This is important to discuss with the customer how the stop loss should be done.
Yeah.
Should be done at bid or offer, should be done only when the level is really cross and you already have some slippage there, and then you start with more slippage.
Yeah.
Should you try to minimize the slippage and therefore start at the beginning? I think the customer should be, there are discussions to be taken now, not after when the loss is incurred and the customer does not want to understand and is going to complain.
Yeah.
So I think stop loss orders should be reviewed and make sure that the customers know the kind of markets that we're entering.
Yeah. No, I think that's a great point. And I think the other thing that you mentioned, Juan, is just about risk reduction versus expansion and what the potential are. We've talked about volatility, but of course those kind of big changes in risk appetite and attitude really leads to repricing and significant capital flows. And Damian, you and I know from our trading experience that the most traders sort of sit there hoping that markets are elastic and things will mean revert back to where they were. But actually that's not really the case, right?
No.
I mean, when something reprices, that it's a new range that we've entered into. Yeah. And so, with all this sort of potential around, you do have to think about, and in the FX market, who are the big drivers of repricings, Juan? I guess...
Okay, the government expenditure
Yeah.
is quite relevant. Central bank's policy, because they will be in tandem with what happens in the country, and interest rates and the cost of carry of the currency is very important. So those two is what we're facing right now, the elections that we're facing right now. So I think that whatever the governments decide to do, the new elected government decide to do, will be significant long-term impact to the currency levels.
And your background, I do love it because you've had real, you really serviced central banks, didn't you?
Yeah.
And it wasn't from an obvious place. Where were you when you were doing that work?
I was in Frankfurt because the European central banks did not like to deal into London. So we had the European central banks dealing into Frankfurt, thinking that no one will know that they were intervening. So we were doing a lot of interventions for almost all the ERM banks, central banks.
ERM. So that was,
Yep.
pre-Euro,
Yeah,
right?
pre-Euro.
Yeah,
when,
the euro. And then when the euro happened, then that flow died and they came to London. There was no more reason to be in Frankfurt.
That's
But you're,
fantastic.
in a way, you're seeing it play out at the moment in Japan. So obviously that currency is weakening quite aggressively. And the central bank does step in now and again. And everyone is sort of probably not putting on massive size because there's always that danger that when they come in, they'll move it, 10 points, 160 to 150. That's you don't want to get in the way of that steamroller.
The best intervention is the not expected intervention.
Yeah.
And that's why you have to be really afraid.
Yeah.
And I think if things were to become stressed out, there will be intervention.
Yeah. Interesting. And you've obviously in these kind of big repricing moments, and you have a consequential, I would think, uptick in volumes. And that has implications operationally on things like confirms and matching.
Okay, if we are in front of a significant change, investment managers have to readjust. So you will see portfolios being rebalanced, you will see allocations being changed, and you will see large shifts from one place to another. So yes, the volume should pick up considerably. Also, the hedging need, if customers were comfortable not being hedged and now volatility picks up, most likely they will want to be hedged to make sure not to have horrendous numbers in the next quarter.
Yeah. So certainly, it's been great having you on to talk about FX, and as I say, you've written a piece for us in our Horizon publication, which will be coming out imminently. We do like to get the podcast out now earlier than the publication because we want to get the word out to people. The other area, DT, that I don't think we have talked about, but I'd love to talk about, is just this move to the right, potential move to the right that we're seeing, and just what the impact could be on climate. Particularly climate finance, because we've been writing a lot more and focusing a lot more recently on, green mortgages, emission risk transfers, and so on, because of how embedded now, climate focus and climate finance is. And it's been the big thing, in market risk, really.
Yeah, and there's been a big regulatory push as well to offer things like capital relief for loans that you do that are, in inverted commas, green, for example. So if in this shift to the right, there's a big pushback against this, there could be, quite big ructions based off stuff that, was sort of greenlit before by regulators and now might not be. I think there could be some big stuff to play out.
Yeah, so I think we're definitely reading, and we're almost seeing a kind of, it's kind of in tandem with this swing to the right that you're seeing, certainly across Europe, is you have seen a relaxation in attitudes as well. People were really kind of pushing hard on climate risk, I would say, sort of, 3-4 years ago, people were signing up to commitments and so on. And then we've sort of seen the last sort of 18 months to 12 months, I think, a sort of a change in attitude that it's a little bit harder to reach some of these targets, and maybe we need to be a bit easier in finance. And that, of course, as well, has been, coupled with an increasing cost of living, and people, focusing on, what are the practicalities of
adhering to it. Yeah, no, absolutely.
Exactly, and introducing a lot of this stuff. And then, the world is more uncertain. So we've had a kind of an increase in the awareness of, the security implications of moving. Well, one, there had to be a move, away from gas and fossil fuels, given the control that Vladimir Putin has over, gas into Europe, for example.
Yeah.
But then again, just the idea of the security risk of relying on, a lot of offshore wind farms when, those can easily be destroyed, and that could, really eradicate your ability to provide energy as well. So there's a lot of things that could potentially play out in climate as well, and climate finance as a result of, what's happening with these elections as well. So an awful lot to think about. I'm trying to think if there's anything else that we should be thinking about. I think the last thing actually is, of course, interest rates. With what happens. I mean, any sort of perspective on what could happen. I mean, we don't really want to necessarily call markets, but I think what we should observe is, interest rates, as everyone probably realizes now, there's such a big lever. And I think it's very hard for central banks to operate when you have elections around.
Yes.
For fear of being accused of interfering, favouring one side, and so on. So I think, that's a big implication in terms of, what are you expecting out of the US when already the election is starting to play out in that market, right?
Don't forget the outcome of the election is going to be quite significant, expansionary or not expansionary or less expansionary, and that the central bank would have implemented the wrong policy just months before. To do it before you know who's likely to be and what kind of programs are likely to run is very, very difficult.
Yeah. No, I think that's absolutely spot on. I mean, again, we've been talking a lot about the risk in private finance and the valuations around private finance. That problem just doesn't go away, does it?
No, not unless rates really, really start to come down. But I mean, this just doesn't. I just don't see that happening. So I'd completely concur. A lot of those. Well, we're seeing it certainly in real estate. We've seen it a lot in there. But a lot of that private finance can be backed by the real estate market. And, these NAVs aren't moving yet. But, at some point, these things will, something will either be realised and everyone will have a step change down to reprice a book aggressively. You can't really just keep kicking that can down the road. So,
and, big changes, as Juan said, expansion, etc. These are the things that could cause people to start trying to move positions in some of these illiquid assets. And it's that kind of repricing that will, become kind of self-fulfilling and evidential for people. And that could really cascade a problem. So, we've been talking about it, but if you haven't done that work around price testing of these assets, time is running out on this stuff, most definitely. Well, that's a rip-roar of a gallop through the elections. Of course, we'll find out tomorrow that everything that we said is completely wrong, and certainly by the end of the weekend. But let's get this out there and published. Juan, thanks so much for coming on the Skadi podcast.
Thank you.
It's great. We definitely will have an I've Survived the Skadi podcast mug for you, which Alexandra looks after and polishes for us. And if you're enjoying the Skadi podcast, the podcast that is, dedicated for those working in the control functions in finance, and of course those working in legal as well, and litigation disputes, litigation funding, then do subscribe. Make sure you never miss an episode. You may also wish to become a friend of the show and join our discussion community on Discord, DT.
Yeah.
And that's where you can also find all of the materials that we record to support the podcast as well. So there's a real treasure trove for people to get into there and to, look into some of the things that we're talking about further.
Brilliant. Yeah, absolutely. We'll put a link in here.
Great stuff. And it's not just about Horizon. We have other episodes as well, focusing on, career changes. We've got some specific subject matter related podcasts coming up as well. But look out for those when you subscribe. All right. Thanks a lot for listening.
Thanks, everyone.
Thank you.